Peter, welcome back.
Thanks, Megan, for having me back, and congratulations on your 300th podcast. I'm going to record my 800th podcast on Friday for the Peter Schiff Show. So you got 500 to go to catch me. But
you know what? I listen to it. I do listen to it. And, I understand. It's like listening to a foreign language you learned in high school where it's like, I can understand some of it.
Yeah, well, I use simple words, so not that you wouldn't understand more complex
No, but
ones,
even an economic dope like me can follow most of it. So, like, I can follow the trends you're discussing. I just couldn't, repeat it all to somebody. But I don't need to because I have you here.
That's because most economists don't speak frankly because they're trying to confuse you or they don't understand the topic themselves. So, it's very straightforward. That's why it's easy to understand when I explain it.
Yes, I'm definitely your, economy for dummies consumer. So one of the things I like about you. All right, let's kick it off with Elon Musk because this is kind of exciting. I have to say, I'm excited about this. We knew, so just to bring the audience up to speed, he took over 9.2% of the Twitter stock last week, and what was a surprise to many of us, about $3 billion worth of stock, making him their largest stockholder. And Twitter seemed to be having an oh crap moment in response to that, and said, seemed to believe that they could control Musk if they put him on the board and got him to agree that he would buy not much more. If he bought more, it would amount to maybe just 14%, 15%, but no more than that. And that way there would be no hostile takeover. And if he sat on the board, he'd be prohibited from doing certain things. He'd have a fiduciary obligation. He wouldn't be able to tweet out weird things like, should we turn the headquarters in San Francisco into a homeless shelter? Should we change the name from Twitter to losing the W? Stuff that he was tweeting last Saturday after it was announced he would be joining the board. Well, then comes Sunday and Twitter tweets out, the president tweets out, he's decided not to join the board. He didn't like all those restrictions. It didn't sound like Elon Musk to be boxed in like that anyway. And so the New York Times, the Daily podcast was saying today something like, he's not a 50% kind of guy. And so there was already speculation about whether this was the beginning of a hostile takeover, and especially when he refused to join the board. And now we know, I guess, it is, right? So tell us, in terms, even I can understand, what he's done today and how this is likely to go.
Well, today he's supposedly announced that he's made an offer to buy the entire company. But, I don't think Elon Musk has any intention of buying Twitter. I don't think he has the ability, the liquidity to finance such a large purchase. So I think he's just having fun. I mean, I don't know if it's just him being eccentric, or maybe he has a plan. Maybe he thinks he'll be able to unload these Twitter shares. I mean, he already has a pretty big paper profit on the position he has. So maybe his goal is to get out into all the hype and make a little money. But I don't think he's going to buy the company. I don't think it's worth what he is contemplating paying, nor do I think he can finance the offer in the form that he's making it.
So even Elon Musk cannot necessarily spare the cash to buy Twitter, and he's the richest man in the world.
Yes, but he's the richest man in the world because of the paper value of his holdings, predominantly in Tesla, but also in SpaceX. But he would have to sell his stock in order to get the cash, which would collapse the price of the stock, in order to raise the cash. And does he really want to do that? Does he really want to get rid of so much Tesla to buy Twitter? And what does that say about what he believes the relative value of Tesla is? He would be sending a message to Tesla shareholders that, Twitter's a much better buy than Tesla. That's why I'm dumping all my Tesla to buy Twitter. And so even more people would be dumping Tesla. So he doesn't have, $40-50 billion in spare change lying around. I doubt he's going to want to borrow the money and pledge his shares as collateral, because what happens if he gets a margin call? Now he's in an even worse position to have to liquidate those shares. So again, I think it's a bunch of noise. Maybe he's just having a lot of fun with the markets, with the media, and he may end up walking away with a nice profit. And a lot of other people who tried to ride on his coattails will have overpaid for their Twitter stock.
Because already the stock has gone up. I think they said something like 54%, just based on like post his initial investment. So he's already, if he sold his stock today, he would have made some good dough on it. But what he's saying now is he's offering $54.20 per share. He writes, he says, quote, "I have moved straight to the end. Quote, I don't have confidence in management." And he says Twitter has extreme potential. I will unlock it, but says this is his best and final offer. And we put Twitter, as you point out, as at about a $43 billion valuation.
Well, first of all, best and final offer, I mean, that could be a negotiating ploy. So if he really wants Twitter, he would be willing to pay more than that offer. That's his opening salvo in this battle. But again, I don't think it's legitimate. I do think he wants the price of Twitter to go up. But if you actually listen to what he just said, he doesn't like the management. He doesn't have any confidence in the management. Well, if that is true and he isn't able to take over the company, then why would he hold on to the stock? He would sell it. And I think he's basically laid the foundation for selling his shares if they don't accept his offer. And for all we know, he's already doing that. I don't know what the rules are as far as, what he has to disclose. But if he makes an offer and they turn it down, there's nothing that says that he has to hold his stock.
Is there any chance they do accept his offer?
I don't think so. I mean, I think these guys want their jobs, right? I mean, that's, the management just generally wants to keep their jobs. And they want to say, well, it's not in the best interest of shareholders because we don't think that you could effectively manage the company. Who cares? The stockholders will be out. They're going to get cash. They're not going to be shareholders anymore. So that's just a ruse. It doesn't matter. If the shareholders think that $54 is a good price, then they should accept it. And personally, I think Twitter is not worth $54 a share. And so I would just call Elon's bluff and say, yeah, we accept. And see, but that could also cause the stock to crash when he doesn't do it. So I don't know. I think they're in a tough spot.
So this is just entertainment. That's what you think. He's kind of known as a Twitter troll in what I think is a fun way. Sometimes it's gotten him in trouble. It's gotten him sued. But
this has already gotten him sued. They've already had lawsuits now filed on behalf of Twitter, and I'm sure if he ends up selling his stock, he's going to get sued for that too.
Just another
But he
day.
can't afford to pay lawyers. He's got a lot of money for that.
That's absolutely right. Okay. Maybe he'll move over to the Kelly's Court section of our show one of these days soon. So let's talk about Putin's price hike, because poor Joe Biden, the savior of our economy, things were going along just perfectly and swimmingly until Putin started a war in Ukraine. I mean, even Biden's not bold enough to put it that way, but he is blaming these crazy inflation numbers on Vladimir Putin. And you've been making two interesting points lately. Number one, it's not Putin's price hike. But number two, the inflationary numbers are worse than is actually being revealed. The number's not really 8.5. It's more like double that. So let's start with point one. Why is it not Putin's price hike that is causing inflation to now be at, I think it's a 41-year high, 8.5%?
Well, first of all, we've been dealing with much higher than expected inflation numbers, for a long time. All of last year, all of 2021, long before Putin invaded the Ukraine, prices kept going up month after month, more than expected. And the Fed kept saying, don't worry about it. It's transitory. It'll go away on its own. And in fact, the Fed was finally forced to reluctantly admit that inflation wasn't transitory. And all this happened before Putin invaded the Ukraine. And by the way, even if you're going to try to blame some inflation on the invasion, it's more the sanctions that are affecting prices than the invasion itself. Not that I'm saying that, we should condone the invasion, but, we also have to accept the responsibility that the U.S. is leading the charge on these sanctions. And it may be the sanctions that have more to do with it than the invasion itself. But I think neither is the culprit. It's all the Federal Reserve and the U.S. government. It's Congress, it's the Biden administration that has been spending money that it was not collecting in taxes. We were running record budget deficits, and the Federal Reserve was monetizing those deficits. We were printing all this money, and the government was spending it. We told people not to go to work, not to be productive, don't help make stuff, don't provide services, but here's a bunch of money to go out and spend. We want you buying stuff even though you're not making stuff. And so we flooded the country with money. At the same time, the production of goods and services slowed down. And of course, prices went up. It's not a surprise. It's exactly what I was saying was going to happen when they first went down this misguided path. And so we're simply reaping the whirlwind of the wind that we sowed.
It's too much money chasing too few goods, and they just kept pushing money after money after money into the economy, and then finally found a scapegoat, Vladimir Putin. Great. That's going to involve oil and gas shortages, and we can blame everything on him. No one's buying it.
And by the way, Megan, the sheer volume of goods coming into the United States is at an all-time record high. So we've never had so much stuff coming into the country as we have right now. The problem is we printed even more money. And that's why everybody is, chasing all this stuff. So the problem isn't a lack of stuff. It's a surplus of money. Because the government can print money, but they can't print stuff. So if they keep printing money, clearly prices have to go up because there's nothing to buy with the money they print.
And why is it worse than 8.5?
Well, when the government calculates the official CPI, there's a methodology that they use, and they purport to try to take into account substitution or improvements in quality to adjust the price. And so the prices that are actually coming out of the CPI are not the prices that go in. There's a lot of manipulation going on to arrive at that number. And when the government changed the CPI in the 1990s, they specifically said that they thought the CPI, in the 80s and 70s was flawed because they thought that because they didn't account for substitution and
wait, let me just stop you and to dumb it down a little bit, okay? Just dumb it down. So CPI is Consumer Price Index, and we look at this to see how much certain goods, people like me look at it to see how much has, have groceries gone up, this March over last March, or this month over the month before. How much, what about, all consumer goods that we buy, basically.
Right. So let me give you an example. So take groceries. Yep. Let's say the price of broccoli goes way up. They decide, well, consumers didn't buy broccoli because it was so expensive. Let's take it out and let's stick Brussels sprouts in there because Brussels sprouts didn't go up as much. And then they say, oh, steak prices really went up. Okay, let's say people bought chicken instead of steak. And so we'll take out the steak and we'll assume they bought chicken. They make all these adjustments. The basket is not fixed. Yes, that's correct.
Okay,
but before they fixed it, right, in the 1990s, the CPI represented a fixed basket of goods. So all they did is look at the price of goods and then look at how much the price changed. And if we were measuring prices today, the way we measured them in the 80s and the 70s, because we want to go back and say, oh, this is the worst inflation since 1981. Well, if we measured inflation today using the same CPI that they used in 1981, that's where we'd probably be at about 17%. Not 8.5%. So this is the worst inflation in the history of the country if we measure it accurately. But the government doesn't want to be honest about inflation. It lies about inflation the way it lies about everything.
Well, one of the other stories we're starting to see now from the media is this is peak. Don't worry. This is like the good news is we've peaked. And of course, I don't know anything about money, but I do know that I was told inflation was transitory and not to worry, and it kept getting worse and worse and worse. So when they tell me it's peak, I don't believe them. Should I believe them?
No. I mean, first of all, they said it peaked a while ago. And so we're higher than where it was when it supposedly peaked. But it's as peaked as it was transitory. And there's no reason to believe that it's peaked. Think about where interest rates are. Even though the Fed is talking about raising them, they're still at 25 basis points, 0.25%. The last time inflation was this high in 1981, interest rates were at 20%. So we're not even close to 1%, let alone 20%. So inflation is not coming to an end like it was in 1981. It's just getting started. This is like 1971, not like 1981. We have a long way to go. We're not even close to the peak of inflation.
So what about the Fed? and it's had interest rates so low. It's made borrowing money so easy for so long. And all that money's flowing in the economy as a result. Now they're starting to inch up the interest rates. Is it enough? Is it going to be enough soon? How high should it go, and should it go high at all?
Well, the interest rate should be above the inflation rate. So even if you believe
the real one or the fake one?
Well, the real one. But if even the fake one is we can't go above 8.5, people aren't lending money to lose on purpose. You have to have a real return that exceeds the rate of inflation. And, we're not even close to that. But the reason that the Fed is not raising rates significantly to fight inflation is because it can't do it, because we all have so much debt. But the reason we have so much debt is because the Fed could never raise rates in the past, because every time they tried, the economy would go into recession, the markets would tank, and then it'd have to go right back down to zero and do a bunch more quantitative easing. So the economy gets more and more addicted to cheap money every time we get a bigger dose. And now they're claiming that we can go cold turkey on the cheap money and nothing's going to happen. I mean, the economy has never been more vulnerable to a rise in interest rates than it is right now. And we've never had more inflation than we do right now. So higher interest rates have never been more necessary than they are right now. But we can't get them without collapsing the economy. So we won't get them. We'll have massive inflation instead, which will do even more damage to the economy than a collapse.
Oh my gosh. Because, people have referenced back in the Reagan years when we faced high inflation, and what did they do? Well, they did raise interest rates a lot, and it was painful, but it helped. But you don't see that as a realistic option in front of us, or at least not one anyone's going to take.
No, and not only do they have to raise interest rates, they have to dramatically reduce the money supply. They have to reverse all this quantitative easing. They have a $9 trillion balance sheet.
Let me just interject again. I know I'm supposed to know what quantitative easing is, but I don't really. Can you explain that just quickly?
Yeah, well, it's very confusing because the whole term is a lie. But what quantitative easing really is debt monetization. That's when a central bank, the Federal Reserve, prints up money and buys government bonds. And so they put new money into circulation. They are inflating the money supply. That is the very essence of inflation. Whenever the central bank says we're doing quantitative easing, what you should actually think they're saying is we are causing inflation. And that is what they did. And the consequence of that is that we're all paying higher prices. But if they want to get rid of the inflation, they have to shrink that money supply. So they have to do the opposite of quantitative easing, quantitative tightening. They've got to sell U.S. government bonds and then take the money they get and destroy it so that the money supply goes down. The problem is, who is going to buy all these government bonds? Because up until recently, the Federal Reserve was the biggest customer of the United States government, because the Federal Reserve was the biggest buyer of treasuries, helping to finance the deficit. Well, if the Fed goes from being the Treasury's biggest customer to their biggest competitor, if the Federal Reserve is competing with the government selling treasuries into the market, who is going to buy all these treasuries, and where is the money going to come from? The answer is no one's going to buy them. The price has to collapse. That's why interest rates are rising every single day. We just hit 2.9% today on a 30-year, 2.8% on a 10-year. These are the highest rates have been since COVID. But they're going up every day because nobody wants to buy treasuries. So every day, more and more treasuries get sold. Rates are going to keep going up until eventually the markets crash, and then the Fed is forced to pivot on its stance and go back to we can't hike rates, we can't shrink our balance sheet. And that's when inflation can really kick into a higher gear. As bad as it is now, it's going to get much worse.
Okay, so that's what I'm looking for, the prediction. So they can't fix it. The quantitative easing can't really be effectively undone. They're not willing to raise interest rates above 1 point above 8.5 or 1 point above what it really is, which is more like 17, right? It's to 18%. So they're not going to do what's necessary to sort of do what happened under Reagan.
Because remember, if the Fed is going to do quantitative tightening and sell treasury bonds, the U.S. government, the Biden administration, is going to have to dramatically reduce government spending. Not just reduce the rate of increase, but actually spend less than they did in the past, and actually spend a lot less. The budget deficit is projected to be $2.5 trillion. Now, it's probably going to be over $3 trillion if they're projecting 2.5. But how are they going to sell $2.5 trillion worth of treasuries when the Federal Reserve is also selling hundreds of billions worth of treasuries during the same year? They can't do it. So the federal government is going to have to dramatically cut spending so that it doesn't have to borrow so much money, or they have to have a massive tax hike on the middle class right now, effective immediately, maybe double income taxes on the middle class, which, I mean, clearly they're not going to do. They're not going to cut spending either, because they'd have to cut Social Security, Medicare, all the entitlements. I mean, they're just expanding Obamacare. We're broke. The Fed is raising rates. And these idiots just voted to spend even more money on Obamacare, and we can't even afford the money we're already spending. So it's never going to happen. They're just going to keep on printing until they destroy the value of the dollar completely. And as I said, prices are going through the roof. They have just started. They've only just started going up, and they're going much, much higher.
So how does that end? I mean, does that end in a massive recession? Where does that take us and when?
Well, it ends, I think, in an inflationary depression. I mean, it could end in hyperinflation, where the money has no value whatsoever, and you can't buy anything. No matter how many millions you have, there's nothing that you could buy because no one will sell you something. But if we're going to stop that from happening, then we're going to have to suffer a severe collapse, a financial crisis, far greater than anything that we had in 2008. And nobody gets a bailout from anything. No banks get bailed out. They have to fail. And in fact, when they fail, the depositors are going to lose their money, because there's no FDIC money either, because that would have had to come from the Fed. So depositors lose their money. Companies go out of business. Investors get wiped out. Jobs get destroyed. It's going to be a real mess in the end. That's why they're waiting so long and kicking the can down the road for as many years as they have, because the consequences are so horrible. Nobody wants to face them. But every time we kick that can down the road, we make those horrible consequences much worse. So since we've been doing it for so long, you can only imagine just how horrific things are going to be in order to avoid hyperinflation, which would be even more catastrophic.
All right. So let's say we elect Peter Schiff as our next president in 2024. What's the first thing you do?
Demand a recount. No, no, well, they're not going to elect me, obviously. But if somehow I could become the president of the United States, yeah, I mean, there's a lot of things I would do. But in the short run, we would have to still go through some pain. I mean, there is no quick fix. But what I would do is enable the economy to fix itself over the long run. Because the problem with the economy is government and the Federal Reserve. We need a free market economy, not a government planned economy. We need the government to dramatically reduce its size and its cost so we can return those resources to the private sector. We need to dramatically deregulate the economy so that the free market can regulate it, not a bunch of bureaucrats. And we need to return to sound money, not money that can just be created out of thin air that has no value. So if
The gold standard?
Yes, that's the standard that the founding fathers put us on. They did it for a reason. It worked very well for as long as we followed it. So we just need to go back to it. And I'd like to get rid of the income tax, the federal income tax, the corporate income tax, Social Security tax. Make government much smaller. I mean, I think the only thing the federal government should do is national defense, and it still spends too much money on defense. I think the rest of it should be covered by the states, although most of it, shouldn't be covered at all. It should be taken care of in the free market. But, America could be a very prosperous nation again if we repeat what made us so rich in the first place. But right now we're broke. We just don't know it yet. We're living off of borrowed money. We are the world's biggest debtor nation. We owe more money than all the other nations combined. We're running enormous trade deficits with every nation on the face of the earth. So our economy is completely incapable of producing the goods that we consume. We borrow from the rest of the world because we don't have our own savings. We're basically being supported by the rest of the world. The world has to bear the cost of subsidizing the U.S. economy. And that's going to come to an end. And if we're going to stand on our own 2 feet, if we're going to be productive again, then we're going to have to return to the limited government, maximum economic freedom type economy that we had in the past.
You've got my vote. Okay, we'll do it. There's so much more to go over. You heard Peter mention it a minute ago, but the sanctions that we passed on Russia, right? That Joe Biden put in place and the Europe put in place. Why that may be doing more harm to us than to Vladimir Putin. We'll get into that. Plus, I want to ask about what to expect in the housing market. A lot of people worried about that. We're going to pick it up there in 1 minute. The sanctions on Russia, are they doing what we want them to do financially to Russia? And what are they doing to us?
Well, think about it logically. So what are we doing with the sanctions? So Biden and other leaders are telling Americans, hey, Russia's got gasoline that you need and food that you need, but you can't buy it from them anymore. We're not going to allow you to buy these goods from Russia. So you got to buy the goods someplace else. Well, now we have to pay more because now there's all this demand from, the other sellers. They have much higher prices now because we've eliminated all the supply that was coming from Russia. So Americans end up paying a lot more for those goods that the U.S. government won't let us buy from Russia. But now think about it from Russia's perspective. Russia still has all their oil. They still have all their food that's now way more valuable because we've caused the price to go up. And now they're able to sell either illegally on black markets or to other nations that are still trading with Russia. They're actually still able to sell their oil and their food. They just get a higher price for it than they were before. So Russia may be winning from the sanctions, and it's Americans, it's Europeans who are losing. So I think that, like most things the government does, it typically backfires. Like when the government creates an anti-poverty program, you end up with more poverty, not less. And so by sanctioning Russia, we're probably going to end up helping Russia and hurting ourselves, especially by highlighting to the world the dangers of using the U.S. dollar as the reserve currency. And so we may have just hastened the demise of the dollar as the reserve currency, which means we accelerate the collapse of our own economy.
So basically, it wasn't going to work, the sanctions, unless we got everybody to join on board. You have to make sure India's on board. You have to make sure China's on board. You have to make sure that all these Middle Eastern nations are on board. Otherwise, they don't work so well.
But even if they're all on board, there can still be people that circumvent. Because let's say because of the sanctions, a product that Russia was selling went from $1 to $3. And so now the market is $3 and it's really expensive. And now under the table, illegally, Russia says, hey, we'll sell you this stuff for $2, right? You can get it for a big discount to the $3. There are going to be people who will illegally buy that stuff because they're saving so much money paying $2. But at $2, Russia still gets double what they were getting before the sanctions. So Russia wins, and everybody else loses as a result of those sanctions. So, that's how I think this ultimately plays out.
There was a report that the ruble's worth more now than it was at the beginning of this war. I've heard some people throw some cold water on that. What do you make of that?
No, that's not a report. That's a fact. I mean, I haven't checked the exchange rate this morning, but the last time I looked, the ruble was higher than it was when the war began and the sanctions were announced. Now, initially, there was about a 40% decline in the ruble, and President Biden was bragging about how much value the ruble lost. Well, the ruble has recovered all of that lost value and then some. Now, the ruble is still a lot lower than it was a year ago, so it's not like we have a strong ruble, but it has strengthened recently. And I believe that is a trend that's going to continue. And right now, the dollar's been very strong against a lot of other currencies, in particular the euro. Wasn't just a ruble. But I think that dollar strength is eventually going to reverse as well. I think the dollar is going to come under a lot of pressure when the markets realize that the Fed is bluffing about its ability to fight inflation, and that when the markets, figure that out, and the Fed is ultimately forced to reverse because of the weakness in the economy and the markets, I think the dollar is going to tank across the board, including against the ruble. And now that Putin has kind of fixed how much gold the Central Bank of Russia is willing to buy priced in rubles, if we see a very weak dollar in terms of rubles, that will put a lot of upward pressure on the price of gold because a lot of Russian banks will be buying gold that they can turn around and sell to the Russian government at a profit. And the strength in gold will also accelerate the decline of the dollar and feed the whole process.
I know you're big on buying gold and silver as well, and that you have a firm that helps people do that. But I've heard you say it for a long time that gold is a good investment. What about this notion of the dollar no longer being the world's reserve currency? Can you explain what does that mean, and how does that affect regular people?
Yeah, well, first of all, I look at gold as money, as a store of value, not as an investment per se, like you invest in stocks or real estate. You hold on to gold to preserve value because it doesn't throw off a return like stocks or real estate do. What was the question you asked, though?
What about the dollar as the world's reserve currency?
Yeah.
Like, what does that mean, and what does it mean to the regular Joe watching this program if that is no longer the case?
Yeah, people don't really understand the degree to which the American economy is dependent on the dollar and its role as the reserve currency. You've often heard the U.S. economy described as a service sector economy, right? We're all about services. Well, where do we get all the stuff then? Because we certainly consume a lot of stuff. Americans are, incredible shoppers. I mean, we have an insatiable appetite to buy stuff, right? But if we have a service sector economy, where's all this stuff coming from that we're buying? Well, it's coming from China and other countries. Well, how do we pay for it? We don't. We just print money. You see, under a normal economy, if we didn't have the reserve currency, we would either have to produce stuff for ourselves or produce stuff for our trading partners to trade with them for the stuff they produce. But we don't have to produce anything. We just print money. And the rest of the world takes the money we print for the stuff they make. And so we have a much higher standard of living because we get to consume all this stuff that we didn't have to produce. So we didn't really pay for it. But when the dollar loses its status, then the rest of the world isn't going to want dollars anymore. They're going to want stuff. And so if we want their stuff, we're going to have to make some stuff of our own to give them. And we can't do it because we don't have the factories. We don't have the savings to create the factories. We don't have the supply chains. We don't have the skilled labor. We don't have anything that a manufacturing economy needs because we're no longer a manufacturing economy. I mean, we manufacture a little, but not nearly enough to satisfy our demand. So what would have to happen if the dollar was no longer the reserve currency is American spending would implode. Consumption would collapse because we'd have nothing to buy. And so our entire GDP would implode. We'd have a massive recession because Americans wouldn't be buying anything because we couldn't afford anything. And all the shelves would be empty because foreigners wouldn't be sending us the stuff that they produce. And we don't have the capacity to produce it for ourselves.
What is the likelihood that could happen?
Oh, 100%. The only question is when. Because the only way to avoid that would be for the U.S. government to act fiscally responsible. But that's never going to happen. In fact, as long as the dollar is the reserve currency, we have no incentive to be fiscally responsible. So that's the problem here. We're going to keep on doing this until there's a crash, because the only thing that will stop it is a crash. Because we won't voluntarily, face the music because, it's so politically damaging to the people in power to do that. So, and I also think that a lot of people in the U.S., including at the Fed, just take for granted the dollar's reserve currency status. I mean, they don't think that we could ever jeopardize it, that no matter how much money we print, no matter how much our deficits are, the rest of the world is just going to go along for the ride. And I think they believe that because they've gone along so far. And, we've gotten away with it this long. And so the belief is we'll get away with it indefinitely. And I think that hubris is going to have a big price because that's not going to be the case. And I also think that the Fed and the U.S. government have underestimated the degree to which that reserve currency status is so, integral to the entire bubble economy that we have, our whole service sector economy. That's the linchpin. You pull that out and everything implodes.
You're talking about manufacturing and how we don't do it anymore. And this is one of the reasons why Trump got elected, why Rick Santorum's book sold well. It wasn't always thus in our country. So what happened, right? I mean, was it NAFTA? Like what brought us from a country that manufactured its own goods with pride to a country that buys everything from China? Yeah,
well, it was big government. It was taxes and regulations that made the U.S. uncompetitive relative to the rest of the world. And then it was going off the gold standard and going on a dollar standard, where once the dollar was the reserve currency, the rest of the world needed dollars. And how did they get dollars? Well, they sold stuff to Americans. And so we basically outsourced our entire economy. And in the short run, we benefited because the cost of production was lower overseas than it was in the U.S., especially because American companies had to deal with high regulations, high taxes, labor unions, all sorts of other things that ran up the cost of production that foreigners didn't have. And of course, a lot of the regulation, the labor laws, the environmental laws, these other countries didn't have to deal with that. And so they didn't have to bake the cost of complying with those regulations into their labor cost, into their price of their goods. And the wages were already, much, much lower in the other countries. So Americans got a good deal. We traded our jobs for stuff. And we did that for decades. But, we can't do it anymore because we now have so much debt, and wages around the world have increased to the point where there's not a big arbitrage left anymore between labor costs outside the U.S. and labor costs inside the United States. And foreigners don't want to, play this game anymore. They have too many dollars. They have too many U.S. treasuries, and we're making that apparent by, flexing our muscles with these sanctions. I think that we've reached the end of the road here on this game. And, when we experience the true consequences of what's happened, because, we've been living on credit cards and borrowed money and imported goods, and we don't realize how drastically things are going to change for the worse when we can't rely on those things anymore. Those lifelines are going to be gone.
So compare us right now to China, because they've taken a very different tact. And I've heard you say the 20th century was ours and the 21st is theirs.
Yeah, and it's not that China is doing everything perfectly, far from it. And I don't think that the Chinese economy is anywhere near what our economy was, let's say, in the 19th century and early 20th century. We are much freer, or we were much freer back then than China is now. But unfortunately, in many ways, China is freer today than we are now, and that is the problem. And I'm talking about economic freedom, not necessarily political freedom, although I think we may be losing that now too. China is positioned itself much better because they have a far more productive workforce than America. You don't have armies of people dependent on government. You don't have people collecting Social Security and welfare. People are saving in China. They save a very substantial percent of what they produce. And they produce a lot. Just go walk down the aisles of a Walmart and take a look at where everything is made. These are very productive people. They have the equipment, the capital, industrial capacity to produce. And that's what's important. All we have is people that want to buy. But what good is wanting to buy something if you don't make anything? I'd rather have the factories and the ability to make stuff, because if you can make stuff, you can consume it. You can't consume what you don't make. So China actually is holding the cards, not America. I think they've built a far more viable economy than the one that we have. We have a bubble economy. And I think when the dollar crashes, the Chinese currency is going to rise dramatically. And as Americans see their standard of living collapse, the Chinese are going to see their standard of living surge. Because what's going to happen is all those goods that the Chinese used to make and send to America, they're not going to send them to America anymore. They're still going to make them. So what are they going to do with them? They're going to consume them themselves. And their lives will be a lot better when they have their stuff instead of our paper. And our lives are going to be a lot worse when we don't have their stuff and all we have is our paper.
How would you hedge against that? For individuals out there feeling scared now as a result of this discussion, what should they do? We can't control, yes, elect the right leaders, but I know you say no leaders are good. The politicians are not the answer. So what should individuals do?
Well, you mentioned yourself. Donald Trump campaigned on making America great again by revitalizing our manufacturing, and none of that happened. The trade deficits were higher when Trump left office than when he came in, even if you look at the trade deficit before COVID. So we were still continuing to, disintegrate as an industrial economy, even during the Trump years. So, yes, the politicians aren't going to change it. Doesn't matter who you vote for. But what you do need to do is protect yourself. And that's what I've been doing myself for years. And I've been encouraging all of my clients to do the same thing. You've got to get out of U.S. dollars. You've got to recognize that inflation is a tax. It's the way the government is funding its deficits. The deficits are going to go up, so the tax is going to go up. And there's more reasons now to avoid it. And so I am helping people rearrange their investment portfolios in light of this reality to invest in countries that are not going to have this rapid inflation, but to also own assets, real assets, productive assets that sell products and services that consumers have to buy, not just what they want to buy, because a lot of things they want to buy, they're going to stop buying because the stuff they need to buy is going to be so expensive. So you want to own the companies that sell the stuff that people need to buy, and they can raise prices, and they're paying their earnings to their shareholders in the form of dividends. So you have to be an old-fashioned investor for value and dividend. You got to look towards resources, raw materials, agriculture, energy, mining, but then things like utilities or things, whether it's tobacco or food, things that people have to buy, and they're going to pay higher prices. They're not going to cut back like on entertainment or a lot of buying computers or things like that, gadgets that are fun, but they don't really need to upgrade to the newest phone when their phone they've got will do. They need that money for food. They need it for their rent or something like that. So you want to invest in those, but you have to recognize that you need to be outside the U.S. So we're building portfolios of foreign stocks predominantly, but also focusing on some emerging market exposure, commodities exposure, precious metals. Gold and silver will be big winners in a monetary reset where the dollar is no longer the reserve currency, because when the dollar is out, gold will be back in. Because before we had the dollar as a reserve, everybody had gold as reserves. We only went off the gold standard to go on the dollar standard, and we only did that originally because the dollar was backed by gold and redeemable in gold. So the world was still on a gold standard until 1971, except it was on the gold standard through the dollar. Well, we defaulted on our commitments to redeem dollars for gold in 71, and so we've been on a fiat standard ever since. But when this experiment comes to an end, the world is simply going to go back to what existed before 1971, which is a gold standard, only it won't be through the dollar. Countries will have their own gold reserves. And obviously, in that environment, the price of gold is going to be much, much higher. So, I would invite your listeners to reach out to me and talk to me through either my representatives at Euro Pacific Asset Management, Euro Pacific Capital, to help create a brokerage account or a managed account.